You don't need more time. You need fewer distractions. You don't need motivation. You need self-control. You don't need more resources. You need resourcefulness. You don't need luck. You need preparation. You don't need to be busy. You need to be focused. You don't need to know everything. You just need to start.
All right, let's start. We've got to simplify. We've got to have self-control. We're going to have to get prepared for a different outcome tomorrow, and we're going to need to hustle and get focused because it's getting choppy on Wall Street. It was a bloodbath today. The market opened up largely flat. A couple outliers showing some remnants of strength. All of that quickly turned south as the SPY, Nvidia, Tesla, everything began to dump. I'm going to take you into some important charts because if you go back to my video that I posted yesterday, I did predict this pullback to these levels of support. I was asked a handful of times, okay, Josh, we're at that level. Is it time to load up right now on some of these top plays? And I'll tell you, going into tomorrow's Fed talk and the expectations that the market clearly has on Fed Powell and the outcome of this talk at Jackson Hole put a ton of fear in the marketplace. And it didn't appear as we were moving into close that the market was going to give us much of a bounce. Now, I don't know how tomorrow's going to turn out, but I will tell you this. It's best to follow the market because if these markets want to pick back up and begin to skyrocket and go back on a bull run, we can always jump in once we see those green candles with the whites of our eyes, guys. Well, what exactly is happening? Well, I'm going to keep it very simple. The bulls have always believed that inflation would come down before the economy would weaken. In recent days, we've gotten a ton of jobs data that suggested that unemployment was on the rise. However, in the data that came out this week, the market seemed to want to go up, believing that overall the jobs data was largely in line with expectations. But as we get closer to the Fed talking, there's the desire for the market to see a Fed who's not going to discount the need for more rate cuts. Basically, the bears are suggesting that this market needs a minimum of 3 rate cuts this year. Simply put, they believe we're going to fall into a decline and that earnings expectations for Q3 are simply going to go down and not up. And I want to remind you guys that the only reason why stocks go up is the belief that they are growing their revenue, growing their profit margin. And if the market doesn't believe that that's happening around the corner, well, then they're going to sell. And that's what we saw today. The market wants to see a Fed who is open-minded to a 50% basis cut in the month of September. Now, they've counted on a 25-point basis cut in September. But here's the number one thing. They don't want to see him downplay the need for more. They want to have confidence that he is watching carefully and will react more aggressively if the data doesn't stay within market expectations. Some of the things we had going on in the market today was we had higher bond yields, which are negative for stocks. We had initial unemployment claims that rose, but they rose in line with expectations. And so it was largely interpreted as a stronger than expected jobs market. We had manufacturing PMI that fell. It was weaker than expected. And more specifically, it's actually the weakest report that we've had in the last 8 months, which is pretty concerning. I remember when we were back in 2008 and 2009, how the PMI data just kept rolling in and showing more and more weakness. I'm sure that everybody else is thinking the same thing that I am, that that's a huge concern. And then we had the July home sales, which rose slightly higher than expected, but not enough to impress a market already bent on a sell-off. This is the Stocks with Josh show. It was a rough day on Wall Street. I could see by a lot of the comments in the Stocks with Josh Discord that people were having trouble trading the choppy markets. There was a lot of starts and stops. We were able, by an alert that I gave on AVGO, to pull off a 100% plus option swing in the profit today. It was a beautiful run, and we basically caught the midday God candle that AVGO gave us that allowed us to run up. We took profit, and after that, that candle turned completely bearish and produced a giant wick, pointing to more downside. Guys, don't trade alone. Learn to chart. Trade with me and the Crown Traders. Check out the Stocks with Josh Discord. I'm going to leave a link in the top pinned comment. And hit that like and subscribe to get daily commentary on the direction that these markets are heading. Okay, let's talk a little bit about some hot plays. I'm going to show you a couple important charts. I'm just going to go through them right now. Let's jump into the charts. First off, let's start by looking at the SPY. Guys, we went up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. We had largely green candles. We had this one red doji candle the day before last. Today, we've had a monumental sell candle, but I just want to point something out to you. We're still above support, right? We've actually are above yesterday's low, and we're sitting on the 5 EMA. And so I think tomorrow will start off a little rocky, but as long as by midday after Fed Powell has spoken, we are above 555, I think the market absolutely can continue to climb. I just want to remind you guys that this is the very first pullback that we've had since we came off these lows, and so don't overreact. The next target, if we are above 555 by market close or midday tomorrow, the next target's 564, back to all-time highs. All right, let's talk a little bit about Eli Lilly. I want to both warn you on Eli Lilly, but also advise you that there is an opportunity. So Eli Lilly showed strength today in the midst of a lot of weakness. There's a lot of analysts who believe that Eli Lilly will hit $1,000 this year. I also believe that it absolutely can. It's a stock that had a monumental green candle showing that the bulls took control back from the bears on this stock. We're at the top half of the channel, which means that the bulls are in charge. But here's a couple things I want you to understand. This will be good for you guys, right? If we get above 960, then this thing, and we close a daily candle, if we get above 960, then this thing absolutely is going to be on its way to $1,000. Now, I just want to remind you guys, it's not enough for the price just to push above it. We need to close above 960. And if we do that, then I believe this is going to hit $1,000. Now, if we don't, and tomorrow we press through and we open a candle beneath 940, that was the trigger last time for the sell-off, and I believe that it could be a trigger again for a sell-off back to easily 897. So I wanted to put that on your radar. Let's talk a little bit about Tesla. I actually jumped into some Tesla puts this morning, and those went up 100%. By midday. I should have stayed in them. I do have a runner. The one runner is up 200%. Now, I got out of my position when I attempted to switch over to some calls after we got a midday pump, but that quickly faded. I got stopped out, and you can see that this is where I believed the stock would come back to if we couldn't close above 217, and we are on the heels of touching it. I see this as an opportunity because I'm still largely leaning bullish. I think that this may have been an overreaction. I don't personally see the data that's sufficient to justify an entire market falling apart. Remember the chart we started off with, the SPY, that showed that we're still above the 5 EMA, which means that the market is still on offense. All we had was one bad day. And so I had predicted that we would pull back to 215 likely today on Tesla. We went lower than that. We're beneath it right now, and I think that we're going to hit 212.50 tomorrow, and I'm going to be looking to go long again on some Tesla calls for a bounce back up to a minimum of 217, if not all the way back up to the 223 and possibly 232 level. All right, let's talk about an important stock, and it's NVIDIA. And I wanted to start off today on the monthly candle because I want you just to understand something about candles. First of all, you can see that we're still pretty far away from our moving average, and stocks do like to come back to their moving averages. The one that I've got shown, the white moving average here is the 21 EMA, and so it would not be unrealistic for us to continue to consolidate and move sideways. But the reason why I've got the 1 month candles up is I want you to understand that the market has not yet reacted to this massive buying candle that we've gotten in the month of August. Okay, so this is a very, very powerful candle. And I don't think that the market has really reacted to it just yet. So I had predicted that we would come back to around 125 on NVIDIA, and that's where we've ended the day. And obviously tomorrow's going to be a big day. I also had predicted, let's go to the daily time frame. I also had predicted from the very beginning of this move on NVIDIA. Let me just expand this. I had predicted from the very beginning of this move on NVIDIA that my up target was 131. Well, we hit that pre-market and we sold off. But I'm going to just remind you of what I said to you guys yesterday. First of all, I expected that we would hit 131. It's what I predicted. And then I told you guys that we would likely sell off The big goal is that we would end the day or tomorrow back above this 124, 125 line. I want to remind you guys that in the past, NVIDIA on its move higher has pulled back 6 or 7%, and we haven't even done that yet. This candle is on the 5. Tomorrow, it's all about tomorrow's candle. If we end up closing beneath 124, if we open and close beneath 124, well, then we've got to take this pullback pretty seriously. I want to see this recover after the Fed speaks back above 125, and I believe that this could potentially just be the springboard which pushes us above 131. A lot of analysts have been coming out and raising their targets for NVIDIA. The average targets that I've been seeing over the last couple of days have been between $175 to $200 on the low end. And so there's a ton of bullishness. NVIDIA can have a huge impact on the markets. Let me just take you back into the charts because I forgot to show you the RSI, which I think is pretty important right now for people to understand the acceleration of price that we've been dealing with over the last couple of weeks. This was a monumental confirmation because 3 times in the past, we had come up against resistance of momentum on the RSI. This 4th time, we broke over and we initiated a new move. This was bullish divergence below the white line, and now we are simply making our very first momentum move up on the price of NVIDIA. I just want to point out this has happened in the past. The last time we had a real big move up, we bounced along the top of the RSI moving average until we eventually peaked out, and we haven't even gotten our first bounce here yet. And so I am expecting waves of momentum for NVIDIA. And this is simply the first wave. And just like in the past, we're going to have to test the 5. We're testing it right now. And if we springboard off of it, then we're going north of 131. So don't get too bearish too soon. Bitcoin is down or largely flat today, and my altcoin plays are still climbing today, which is pretty nice to see. And so we're making money over in crypto. Somebody asked me in the comment section, how often do you swing trade crypto? I'll tell you that I tend to swing trade crypto a ton when crypto's on the move. And if you've noticed that you've been getting more swing trades from me on crypto in these Stocks with Josh Discord, it's because crypto's on the move and I'm wanting to get my positions set before it takes off. I think that Bitcoin could explode higher. It also has some bullishness that I see in the charts. I don't believe that the last wick on the weekly candle that we got that was a massive buy signal, I don't think the markets responded to that in the same way that I don't think the markets fully responded to that giant wick on NVIDIA's candle. And so I'm following the candles. You know how I love the candles, and I believe the wicks. When we didn't have the wick, I tell you we needed the wick. We've got the wick. The wick is telling us there's more opportunity to the upside. And so even though we're in an extremely choppy market, and as I said at the beginning, it's time to get prepared, it's time to hustle, and it's time to get focused because tomorrow's going to bring us a new opportunity, and we want to catch it. We want to get behind it, not in front of it, okay? We don't want to get in front of the train that's heading to Cash City. We want to wait until it stops and slows down, and we can enter at a pace that we feel comfortable with, make our decisions, take our risk positions, and then we will do much, much better. Let's do it again tomorrow. There's going to be more winning trades. Don't lose focus. Peace and blessings. Hit that like and subscribe, and we'll talk to you again soon.